Good evening, good morning, good afternoon, everybody, and welcome to We Just Talking. Tonight, I have another special guest. I'm so excited about everybody that I have on here, and I'm excited for you all to meet them. I've had just fantastic friends um, that have so many different things to share. And tonight, I am talking to Monica Berry. I've known Monica now for many years, many years and many business business ideas and transactions. And so Monica is in the same industry as me. She is also a mortgage professional or a loan officer. And so tonight we're actually going to talk about the mortgage industry. um, so help me welcome Monica. Welcome, Monica, to We Just Talking. Yay! Welcome, welcome. I like everybody to introduce themselves in the beginning. So tell my people who you are.
Oh my gosh, well, that's not fair because I don't know what you said about me when you were introducing me.
I
Um,
said,
but
um, I said only great things.
okay, okay. Hi everyone. My name is Monica Berry. I am a licensed mortgage loan originator, and I live in San Antonio on 7.5 acres of farmland with my handsome husband and a bunch of animals, all farm animals. Um, and yeah, I'm just living the dream, the
Living the
mortgage
dream.
dream.
The mortgage dream or nightmare.
Yeah, definitely. I'm not sure.
You know what? It changes from day to day, but I don't think I would do anything else because
Yeah,
it's fulfilling working in this industry, especially when you can
absolutely.
help people achieve their dream of home ownership.
Yeah,
And
yeah.
so we were kind of joking before we started about how everybody is going to get to see their favorite mortgage loan officer after a day of working,
Oh
a
yeah.
full day of writing loans. Sometimes
That's
you
why
know,
we need a glass of wine.
sometimes it's a glass of wine. Sometimes it's just go sit in
So-
front of the TV and eat jelly beans.
Sometimes it's the THC wine that
THC,
comes up.
no alcohol. So
No
yeah,
alcohol.
yes.
Um, I picked this up at an outdoor expo, and it's pretty good. It's pretty good, I must say.
Sometimes I think that you can find the best wines or soaps or foods, sauces at those outside, like at farmers markets or anything that's outside. Like
Yeah.
I'm a sucker for soaps, like handmade soaps
Oh
and
yeah.
all
Mhm.
that stuff. But I guess before we get into like mortgage talk, let's give the people a little bit of our background because we've been friends for at
We
least
go
10
way
years.
back.
It, no, it was my first round at Sprint, and I left Sprint the first time in 2010.
Oh wow. I've known you for a long time.
A long time. That's crazy, right?
Well, it doesn't seem that long at all.
It
Um,
doesn't. Time goes by so fast. And so we originally met through your husband, back then your boyfriend, Kenny. And
mhm.
we would kind of see each other at like the outings, whatever. I think y'all came over and played Guitar Hero at the house. Wild
Right.
night.
Yeah, one wild night we had.
What a wild night we had playing Guitar Hero. And then you got into doTERRA. You got into the essential oils.
Yeah.
And that was before y'all moved to San Antonio, right? Or was it after?
That was right before we moved from El Paso to San Antonio. Yes, right. Like as we were leaving and coming to San Antonio, and then life just completely changed from
Right.
there with the whole oils. Yeah.
So yeah, because you were telling me all about essential oils, and I remember I was like, whatever, Monica, whatever
Yeah,
these
you're like,
essential oils.
so what are you selling? What are you trying to sell me, lady? And then
Yeah.
you're a sales, it's because you were a salesperson.
Yes. Yeah.
So yeah, but and I finally convinced you
It took a little
about
bit.
the oils and getting into the oils and the benefits. And by the way, okay, like I don't sell doTERRA anymore, but I still religiously use my oils. We do, and we love them. So again, if you guys aren't using doTERRA essential oils, please
I
feel
don't
free to.
use my oils as often as I should, but they're always around. Like I probably have no less than 10 oils here at my desk right now.
Yeah.
But you know what? I use the doTERRA deodorant. Like I
Mm-hmm.
swear by it. And the deep blue, because the deep blue is what actually sold me. I remember I was at work, y'all came over to the Sprint store.
Mm-hmm.
My sciatic was hurting, and you gave me deep blue. And I put it on and I actually had forgot. And then I was like, hold on, my back isn't hurting anymore. And that's kind of what sold me on it. And then I hopped on the doTERRA train. I
Yeah, you did. You did. But
got yes, all the oils and then I got into the mortgage industry.
sick. And then you got me into the
And
mortgage.
then I was like, hey, Monica,
No, that's not how it happened.
that's
That's
not
not
how it
my.
happened, but this is how it ended up. It was like, hey, Monica, he probably would be really good at this. You should tell him about it. You said, no, I'm gonna do it.
Yes, okay, okay, listeners. So yes, that's the way she tells it. That's how it happened because I was in a job, and I think a lot of people can relate to this. And this is the honest, to God truth, that I was in a position in my life where I felt stuck, and I was stagnant in what I was doing. I was working in a dental office. I had done dentistry for 13 years. Then I was front office dental, and it's like, okay, what else can I do? This is, I'm living paycheck to paycheck.
Mm,
There's more to life than this. And I was about to be 40. And I'm like, okay, what's next for me? And I was praying and praying, like, for God to just bring me something else, to open a door. And
yeah,
I would talk to you, Tia, pretty much all the time on my
all the
way home,
time.
because I had to drive an hour to work each day. An hour there, an hour back was my commute, because my husband and I decided we wanted to live in the country, right? So we made the sacrifice where I was driving an hour, there, an hour back. So I had time. I had time to think. I had time to contemplate life, and I
Cry a
had
little
time.
bit.
Right. And to listen to all the podcasts and listen to all these things that, I like to hear about. And then I would call you and I would vent. I remember
Hmm.
that I would just vent to you about, what do I do? I wanted something different. I need a change. I hate my job. Um, it gives me anxiety,
Yes.
and I remember then one day you just saying, we were just kind of talking about what the next step was going to be. And then you said that about Kenny. You said, well, Kenny I think he would be really good at this job and do what I do. And I mean, in all honesty, I didn't really understand what it was that you did. Um,
Hmm.
and that's crazy, being that we've been friends for so long, that I'm like, okay, I knew you did something. I just didn't know what exactly. So
Yeah.
when you said that, and you said, well, should try this. And I know because you were friends with Kenny initially, that's how I met you, and you guys worked together. And so, Kenny's skills, and, but I was like, Kenny has a job. And
Yeah, right.
he had a job at the time, but yeah, I was like,
Yeah.
he has a job. And I'm like, what about me? And I remember you were like, oh, well, I had no clue that you would even be remotely interested in what
Yeah.
in this. And I said, well, what do you do, Tia? And then you
Yeah.
broke it down to me, and I was like, oh, okay. And then we talked about, the education aspect of it and what I had to do to
Yeah.
become one of you. And then we talked about money, and we talked about what the possibilities were for income, which is exactly what everything kind of just fell into place because that is
Yeah.
exactly what I had been asking for. And so when they
Hmm.
say, ask and you shall receive, it is the
It's the
truth.
truth.
And so then, you told me everything. And then I said, I remember I was up and ready to go to Dallas. I was ready to move my life to Dallas. And I came home and I told Kenny Berry, I said, Kenny, pack your bags, sell the animals. We're going
Yeah.
to Dallas and
I
I'm
was
going to
like,
be a
Monica,
loan
wait.
officer. I'm going to be a loan officer. And he was
Yeah.
like, what? And so, my husband, very, very supportive man. Um, but he was like, okay, slow down and take some classes first and maybe
Yeah.
see if it's something you even like,
Yeah.
before we do that. And so, I mean, how can you argue with that, right? I mean, he was being logical.
Yes.
And I took the classes, um, and then I got hired, had
Yeah.
like a role to play in that too.
Yeah.
So remember that? Maybe you can
Yeah.
tell that how that happened. So I
Well,
long story short, I took the classes and then I was still at the dental office, still
yeah.
kind of like contemplating my next move, like, okay, who's gonna hire me?
Yeah. Where are you going to get a job?
And
And
then
so I was like, well, I know you can't because you're not coming to Dallas. Kenny said no. You cannot move to Dallas.
yeah,
And so I was like, well, I know work from home. Like you can work from home. And so I knew somebody that worked there. So I was like, hey, I have a friend. She's trying to get into the industry. Like, what can you do? And so she sent the referral and all that stuff, and you got in. And I remember talking to you through it, like, because it's so stressful in the beginning. I mean, this is why I don't talk about what I do a lot because I really don't want to glamorize the job of a mortgage loan officer
mm-hmm.
because it really is hard work. It is
Mm-hmm.
it is not an easy job. It is not for the faint at heart, and you don't just walk in the door and start rolling in the dough.
Yeah.
Like, and
Yeah.
so a lot of times, when people learn about this career path, they're like, "Oh, I'm going to do this because I can make so much money and XYZ." But it takes a grind
Yeah.
to actually like survive in this career
Make
field.
it. Yeah, make
To
it survive.
survive.
Yeah.
Yes. And so when you got in, I was like, Monica, it's not easy. Like I remember I would tell you it's not easy. It's gonna take time. And then like as you're studying for the test and you're trying to retain like so much information, so much information. It's overwhelming. It's like so overwhelming. And I remember you would call me and you were like, I'm so stressed out, this test. And I was like, you're going to do it. You're going to just study, take the practice test, do whatever you have to. Just get your foot in the door. I remember that's what I can tell you. Just get your foot in the door to get a little bit of experience. And over there, it was your experience there was very different from the experience I had because you
Right.
didn't have the support that you needed. And I was like, dang, I really messed up Monica's life. I have ruined Monica's life. I have got her to quit her job and get in this career. And she hates it.
Yeah, that's what's so crazy. It was such a different experience for you. So like you're saying, you can have these experiences that are really great and you have the support. And I think that's the hardest part is finding the right support in this
Mhm.
industry. And yes, so starting with I got my license. I went through the whole training. They licensed me in 13 states,
Mhm.
which, I no longer hold 13 state licenses and I don't want to right now. But, I got what I needed
Yeah.
from the experience. I got a lot of experience in sales, which is something
Mhm.
that I had a little bit of experience in before, but not as much as Kenny does, right?
Yeah.
Or you. And so I got a lot of training that way. And so again, I just think it was, we go through these little like rough patches,
Yes.
and that really is the test, really to be like, can we make it through? Can you
Yeah.
see the light? Can you see the light on the other side? And
Yeah.
and will you stick the path? And so
Yeah.
again, I think it was a huge testament of faith for me.
Yes.
You know, again, went through that experience, left, and then went into the broker side, the
Yeah.
100% commission side. So
And that is so frightening to me, but
mhm.
I think also more fulfilling for you. Maybe down the road. I mean, we'll see what happens down the road. Because in the brokerage, you don't have the security of like the lead generation and all that stuff that you do when you work for a what do they call it? Like a retail
Retail,
mortgage office.
right?
And so when you said, well, I'm gonna go do this and I'm gonna get more experience, I'm gonna learn,
Yeah.
other side of it. And I was like, well, she's really about to take off because she's gonna learn things that I don't even know. Because at
Mhm.
that point I was only doing refinancing. I wasn't
Right.
doing purchasing. And so I remember, we would talk, he would be telling me these things, and I was like, I have no clue what this is. Like, I don't
This
even
is
know how to do any of that. And
right.
but you stuck it out, and like, you were at that one place and now you're in a different brokerage that I think you're kind of like flourishing in, and like making
Mhm.
connections and just learning so much more than you have over the past, what has it been, year and a half?
It's been a year and a half now. Can you
Yeah.
believe it?
Yeah, it goes by so fast, especially when you're doing this. Like, time just flies. Because
Hmm.
one thing that I love about the job that we do, the industry that we're in, is the fact that we get to talk to different people every day.
Right.
And so when you're talking to people, so we talk to so many people every day that I think it just makes the time kind of go by fast. Like, you don't
Mm.
recognize, like, you can be working. It seems like you just got to work, and next thing you know, it's 5 o'clock
Yeah.
because you've been on the phone nonstop talking to your customers, talking to, like, your processors, your underwriters, whatever. But when people ask me, um, why do I like my job, or why do I do this? Like, I really think that it's fulfilling when you can help somebody to, like, reach their goals.
Mhm.
And I felt like that before. Now I'm on the purchase side, right? Now I'm writing new home
Right.
purchases. But back when I was on the refinance side, my very first refinance that I successfully completed when I knew how to do my job, because there were some that, when you're trying to write deals, some things you just throw and hope that it sticks. Some things
It's
you
to the wall.
throw
Right.
it up
Yeah.
to against the wall and like, I hope it sticks. But
Yeah.
I will never forget this deal. I've had two deals that kind of have like stayed with me, but it was an older man, and he was disabled. He had worked his whole life, but he had a lot of like body aches and pains, like from the hard work that he did. He was like a labor worker.
Right.
And so he couldn't work anymore because his back was constantly in pain. Like, because we talk to these people and we hear their stories.
Oh
Like,
yeah.
you get to know them, and you get like invested in their in with them. You get
Their
invested in their
story.
lives.
Their story.
Yes.
You hear their story. Uh-huh.
Yes. And I remember it was so sad because he said, like, he was on a fixed income, and he just had his mortgage, and he had a couple of credit cards to pay that he got to buy his granddaughter's school clothes. So he
Hmm.
had just like two credit cards, and he was like, all I did was this. But with his mortgage and those two credit cards, he was living paycheck to paycheck. He said,
Yeah.
I couldn't even afford to buy groceries. My ex-wife bought me toilet paper, bread, and bologna so I could make it through the week.
That's all she bought him.
I mean, that was it. Yeah. Toilet paper, bread, and bologna. Basics. He said,
Oh, but
just a
yeah.
little bit to get through the week. And I
Right. Right.
remember um as I was trying to like structure up his deal. And when you're new in the industry, you don't really know what you're doing.
No.
You can't let the person on the
No
other
clue.
end of the line know. Like, you
Right.
sound like you are confident in what you're saying.
Yeah.
And so I had no clue. And I'll never forget, the deal was not going to work because his house did not pass the appraisal, and it
Mm.
needed work. His house needed work done. And he
Yeah.
was like, he didn't have any money to get it done, right? But he
Yeah.
needed it like the stucco fixed and he needed it painted. And so he borrowed money
Mm.
to get it fixed because I was giving him a cash out refinance. So
Mhm.
we paid off his debt and then he was supposed to get cash back. And it was like almost down to the wire. And they were like, this deal is not going to work. It's not going to go through. And I was like, oh my goodness. And I remember I prayed about it and I was like, Lord, let this work. Like, and when we got his deal finalized, he cried,
Mm.
cried. And
And you cried and you cried.
I was like, and that's when I knew this is why I do this, to make
Mhm.
a difference for somebody's life,
Right.
make a difference. And even if it's something like minor, to make a difference. And the second one that I did was something very similar. And the lady borrowed money to make her house payment. And she said, if this deal doesn't go through,
Mhm.
and this has ruined my life.
Mm.
And she was trying to get a cash out loan. And so, like, a lot of times people look at loan officers and at people that do refinances like we are taking advantage of people.
Right.
But
Uh-huh.
that is not the truth because, one, we have a fiduciary duty to do what is right for the customer. So,
Right.
as long as you're an ethical person, you're not going to be out here just writing loans just for the sake of writing loans. Like, we're out here doing this to make a difference in people's lives.
Mhm.
And I remember my mom, I was telling my mom, she put her on the prayer list at church, like, on this level with
Yeah.
her. And we got it to go through. I remember my mom was asking me every day, how is she doing? What's happening with her file? And I was like, we can't go into details on people's things, but
Right.
I was like, well, Ma, I'm nervous about it. I don't know what's gonna happen, but I'm really stressed out. And she was like, I'm praying. And I told that lady, I said, even my mom is praying for
Yeah.
you. And
Yeah.
so because these customers, we call them customers, we call them borrowers, but like they become like family almost because we know so much about them and they share so much of themselves with us that
Right.
how can you not become a little bit emotionally invested in what you're helping them do?
Of course, especially when they get that house or they're able to cut their mortgage payment in half.
Yes.
I mean, yeah, absolutely. You have this connection. I always hate when we go through the process and we get to the end. I don't like the end. And I always tell them, I'm like, this isn't the end,
Hmm.
because it doesn't end there because
Yeah.
real estate in a whole is just like an entire like journey. And I
Yeah.
think the more that people realize the benefits of owning real estate and how that is going to really create wealth for
Yes.
them, it becomes this lifelong friendship, right?
Yeah.
Because if you can build trust with somebody or you just hit it off with somebody and that trust is there and you've gone through this stressful because it's stressful for the borrower, it's
Yes.
stressful for the loan officer, everybody involved is stressed out, right?
Everybody's
And
stressed out.
but we all have the same goal. And I think that we just always have to understand that we all have the same goal, and that goal is to get you in that house,
Get you in
uh,
that house, in your
or
dream home.
or
Yes. Or to get that
refinance,
cash. Yes. Get that cash.
get that cash out, pay all your debt off, start from fresh, clean slate.
Hmm.
The fact that real estate or owning real estate and having equity can do that for you is
Hmm.
a tool. It's a tool that everybody has the right and everybody deserves.
I
Um,
went through a training. I think I told you about it. I went through a training, and the man that was giving the training, he was talking about equity in your homes and like when you own a house. So you have equity, you live in your home, and you build equity up on your home. And he said, why aren't you taking that equity out and up? Because if you're not selling your house, you're not paying it off, right? Like take that cash out of your home, put it into an account that can earn money for you.
right,
Because if you don't use your equity, then you lose it. So what's the
right,
point of having all this equity in your home and it's just sitting there. And I was like, you know what, you're right. I'm going to refinance my house. But then the market kind of started doing weird things. And I was like, well, is now the time? And then I missed my window a little bit, but I'm still thinking about it because, when the market is up and house prices are up, that's when you're supposed to take advantage of the equity that you built out in your home, especially if it's a long-term home. Now
Mhm.
it's a different thing if it's just like a short-term investment.
Right.
But if this is your long-term home, take the cash out and let that cash start working for you. Let it start building up interest in a high earning account. And so I'm still watching. I'm watching because I'm ready to get that equity. And
Yeah.
so that's kind of a couple of the things that I think we should kind of talk about tonight because people are scared right now because everybody knows if you pay attention to the news, everybody knows that interest rates are up. And so people want to refinance. People want to purchase new homes, but they're scared to. They're scared
Mm,
to say, well, I'm just going to wait until interest rates go down. Going to wait till
mm.
interest rates go down. And it's a slippery slope also though, because we saw what has happened the past, 2, 3 years, 2.5 years. Interest rates were down, right? Like, I mean, we
Right.
were we were
In the
selling two,
threes.
3%. Like
Yeah.
I even saw one time on like a 15-year loan, I saw something that had a one in the beginning of it. I was like, well,
Oh,
dang. But this was in the height of COVID, right?
right.
But so yes, you can get a low interest rate, but the flip side to that low interest rate, especially if you're trying to purchase a home. Now, if you're refinancing, it's both. It's both, right? To refinance in because you get the low interest rate, your payment can probably drop and you get cash out. And so
Right.
you end up saving all this money. But on the purchase side, when interest rates are down like that, housing prices are up.
Right.
And so what we were seeing the past few years is that, yeah, you can get a low interest rate, but can you even get a house? Because
Right. Because everybody's buying a house. Everybody and their
everybody,
mama.
yes, everybody is buying a house. And then you get into these bidding wars and you end up buying a house more than what the home is worth because you have to offer over
Mm-hmm.
the asking price just to get your foot in the door. So if you were selling your home in 2020, 2021, kudos to you because you made bank. Like, people were
Right.
making really good money over their homes. People were moving from California, they were moving east. So those people came in and they were able to pay cash and say, I'm offering 20, 30, $40,000 over asking price. So the
Mm-hmm.
average person that's just maybe trying to relocate for work, or I want to buy my first home,
Mm-hmm.
or just, I've outgrown the home that I'm in and we need a little bit larger home, but I don't have an extra $60,000 sitting in the bank,
Right.
couldn't buy a house, right?
Right. Right.
So now, what do you tell your customers when they counter with the interest rates are too high, I want to wait?
Well, I just tell them that rate is temporary.
Hmm.
Um, and I kind of do a little comparison with them on things that we kind of don't tend to care about when it comes to interest rate.
Yeah,
Like our vehicles, like our credit cards,
credit
you
cards.
know,
Talk about it.
you know, you have this piece of plastic that, gives you instant gratification, right? And it comes with a price and
A high price.
a high price, and everything comes with a price. I'm sorry, but it does, right?
It
So
does.
everything does, but some are higher. Like,
Hmm.
so with the credit cards, we're seeing 24%, 26%, 27, percent interest.
Hmm.
And what I tell them, I said, when we have those things, we don't bat an eye.
Hmm.
we we use it, we go out to eat, we go on vacation, yeah, we swipe, 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 and we don't bat an eye. But when it
Hmm.
comes to a home, a home, an actual investment,
Yes.
because it is an investment, we have a problem with a 7% interest rate. Can't wrap my head around that. And I kind of tell them, I'm like, see, this is something that's actually going to give you money. It's a piggy bank that you can
Hmm.
literally tap into your piggy bank. And so, and the rate also is the rate because of where you are credit wise.
Yes.
But
Yes.
again, it all depends on so many factors, and
So
that
many.
being your credit score, your overall credit profile. Do you have money in the bank?
Yes, that part. Because how
Reserve.
often do people call in and want to purchase a home? And so I feel like, and this is something that maybe we should talk about like off camera, but I feel like, I mean, I know there are options out there,
Yeah.
but like people need to get education
Yes.
on what it takes to buy a home, because so often I will get phone calls of people wanting to buy a house and have no money to put down. And so step one is, if you are, in the market, if you are preparing to buy a home, start saving your money, right?
Yes.
Start saving your money, and also start looking at your debt profile, because a lot of times you probably could afford X amount of dollar of a home, but because maybe your credit card payments, like once you hit card, as you were saying, credit card interest rate is high. It's like 25% on
Mm-hmm.
average, right? On average, you're paying 25% interest on a credit card. And so the key is making sure that you keep your credit card debt down. And if you want your credit score to be stronger, keeping those balances below 30%. And so a lot of people that I've seen, this is what I have seen, is that people say, well, I don't have any debt, so my credit should be good. I just have my house and my car. And I feel like this is a weird thing. I don't understand credit really, if I'm perfectly honest, because it doesn't make sense to me.
Right.
But this is how credit works. You have to have revolving debt.
Mm-hmm.
You have to have revolving debt in order to build up your score, because if you just have installment debts, which are things like a house,
Right.
are, your credit is not going to be like bad, but you're not going to build it up.
Right.
And so you have to have at least one credit card, at least one. And I always tell my customers that are trying to like build up their credit, just use it once a month. Go use it to
Right.
buy gas, pay it off. And
Right.
then that will show that you're responsible with credit, and you will start to see your score go up. But on the flip side, if somebody comes in and they have a lot of credit cards and their balance is their max, then the conversation is, okay, let's look at all these credit cards. Let's look at the smallest card first, right? And start chipping away at it. Pay this small card off. And now the payment that you are using towards the small card, we're going to go to the next card and just do one at a time, because if you start trying to do like all your cards or your biggest card, like these other cards are going to be neglected. And so it's like, just work your way up.
Takes longer. Yeah.
Yeah. And so like save money, right?
Right.
Start saving money. Make sure you have your credit in order,
Mm-hmm.
and just make sure you pay your bills on time. Don't get behind on anything.
Right.
Don't get
Right.
behind on anything.
And other things that you'll see out there, especially on social media, um, you know, ads and everything for mortgages, right? They will tell you like the price of a home, and then they will say this is the estimated payment.
Mm-hmm.
So then I get a lot of those phone calls that they're like, so I'm calling, I went on Zillow and I saw that the payment for this house, it's something really low too,
$1,800 with taxes and insurance.
Yes, yes, yes.
Yes.
And I'm like, no. So, there's fine print, guys. There's fine print everywhere. Make sure you're reading it. Understand that when you see these ads, that they're not going to give you that Oh man, it's saying my internet's going crazy. Okay, so they're not going to give you that shiny, like I said, that interest rate. It's like, oh, we'll give you a 5.5% interest rate,
Yes,
$1,800 payment, and it's clickbait. It's
it's clickbait.
literally for you to click on it because if
Yes.
you saw 7.5% interest rate on that, you're not going to click on that.
Heck no, I don't want this.
I don't want the truth, don't
Yeah,
give me the truth.
yeah, yes. And
Uh,
and that's the reality. So they tell you worst case
mhm.
scenario, when in reality they tell you best case
Best
scenario when
case.
they should tell you worst case scenario. Because one, whatever they're talking about today is not going to be the same thing tomorrow. It might
Right.
not be the same thing in 3 hours because the way that the market moves, it is like all over the place.
Uh-huh.
And so I think the biggest thing is to, if especially if you're really in the market to purchase, is to talk to a loan officer.
Yes.
Get in contact with the loan officer, find out what your qualifications are. And if you're not qualified, listen to their advice to find out what you need to do so that when you're ready,
Yeah.
you are qualified. And then start looking based off of that. And
Right.
your loan officer is not going to steer you in the wrong direction.
Right.
Because like you were saying earlier, we want you to have that home.
Right.
We want you to have that refinance. We want what is best for you. And we're not going to put you in a situation to where you now have some payment that you just cannot afford, where it's just like, so high that, as they call it, that your house broke or house, all
Right.
you can afford to do is pay your mortgage.
Right.
And so sometimes that's hard to hear though, right?
Oh yeah. I mean, and I'll just say, don't shoot the messenger. And I always tell people, I'm like, this is the hardest part of this job is telling someone, no, not right now. And I never say no. I always say not right now, but this is what we have to do. Like you're saying, a good loan officer will still work with you.
Yes.
Even if you cannot get a mortgage right now, they will still work with you. They will still hold you by the hand. They will still give you a plan. Now, whether or not you put that plan to use is on you. But,
Yes.
but they're going to give you the tools and give you the knowledge that you need to get to where you want to be.
Yes.
Um, Obviously, I tell people, I said, I make money when you do a loan, when you
Yeah.
get a mortgage. This is how I support my family, how I feed my family. So again, it's not me coming to just be the bad guy and I don't want to give you what it is you want. And I think a lot of people have a misconception about really, I'm not lending you the money.
It's
She
not
is
my money.
not lending you. Yeah,
Yeah.
believe me, I wish I could. If I had that kind of money, I'd be blessing everybody.
Yes.
But again, it's not us. We are just kind of the messenger, the deliverer, and we can help you get to where you need to be. And so I think, again, just my message would be nice to your loan officer. Be nice to us because we get stressed out, guys. This job, it's a great, fulfilling job. It is. It
Mhm.
pays well. It's fulfilling. It's all the things, but it's also very, very stressful for us.
Yes. It is stressful because like we said, we get emotionally invested in this, and just as much as my customer wants their home, I want them to have this home, and then I try to bend over backwards to do whatever I can to make it
Yeah.
work. But sometimes it doesn't work, and it's a hard reality for people because, I mean, of course it's personal. Of course it's
Sure.
personal. And so it's so much easier to try to get it on the front end and be like, I know you want a house that costs $540,000. Just unfortunately, where we are right now, your income
Mhm.
doesn't support it, but you can afford this. Like, I know I was talking to somebody the other day, they told me, what they wanted their mortgage payment to be. And I was like, all right, so we kind of have an idea, but let's look at some houses in the area. That's not my job. All right. My job is not to help them find a home.
Right.
My job is to help them get their financing. But they didn't kind of know what that money could buy them.
Mm,
And so we started looking, and I was like, are you sure this is what your budget is? Based off of your income, you can actually afford a little bit more. But
mhm.
just know that if this is where we're sitting at, then this is the type of home that you're going to be, or this is the neighborhood that you're going to be in. And so, when we start looking to buy homes, we start looking at like, what is it like, HGTV and like, all those different type of channels, what Discovery Channel, whatever shows like,
Discovery Channel, yeah.
I don't know if it's a Discovery whatever channel it is that you can see about a house. It's because I have an app. This is a Discovery app, and it has like all those different things on there. I don't know, but like all of those shows. When we were
Right.
trying to buy this house, I was watching Fixer Upper. I was watching like
Joanna
the
Gaines.
yeah Magnolia Channel. There was this one show where it was a lady in Chicago, and she painted every house black. She made lovely homes, by the way,
Right.
but like she liked a black house. I was like, ooh, do we want a black house with gold fixtures? There was another channel, another show was the mom and daughter. They would come in and knock down the walls, and then they
Knock
they
down the
knocked
walls.
down all the walls and they rebuilt the house. And it's like open space concept, lovely cabinets, light
Sure.
fixtures, wood paneling. And
Huh?
so when people start to buy their homes, we all think the same. This is what I want. I need a porch with a rocking chair on it. I need a backyard that I can grow my garden in. And I need my cabinets open so everybody can see it.
Right. Right.
But
It's
that's
true.
not the reality when you're buying a house. Like, I want them to show on those channels the reality of when you're buying a house, when you can't afford to go in and knock down every wall, but you have to
Right.
buy a house. And, going around and trying to find those homes and making them your home and walking in and like, well, does it feel like your house? Like, did you love it? Can you see yourself cooking here or things like that, and having
Mhm.
those type of conversations? And so that's why it's fulfilling. And, that's why we do this every day.
Mhm.
And we continue to do it regardless of the stress. Like we were joking, I was like, I'm sweating right now.
Yeah, we're
Like I
always
just got
sweating
out of
every
work.
time I get off. Yeah. Every time I get off the phone, I'm
Yes,
sweating.
I am sweating because I'm so stressed out trying to
Mhm.
figure this out for you. Let me be stressed. You stay calm. Like you stay calm.
Right.
Let me
You
be
see,
the one that's stressed out and work on the back end of it. Another thing that I wanted us to talk about, we kind of touched on it a little bit about, the rate being temporary. One of my favorite things that I used to say is our we don't make our payments in percent signs. We make them in dollar signs. So if the dollar sign works,
mm-hmm.
then don't worry about the rate. And you know what?
Right.
I had kind of forgotten about it and I need to get back to that.
Yeah, that's a
Because
good
the
one too.
question
Yeah.
really is what is a comfortable payment for you, not what interest rate do you want?
Right.
Because a rate is temporary. It's just the vehicle to get us to the destination.
Right. Right. Stop asking. Word of advice. Stop asking what the rate is.
What's your rate? Mhm.
But that don't stop asking it. Don't who
Yeah,
cares at this point, like you're saying, if you can afford the payment,
that's it. That's it.
what more do you need? Hmm.
And the other side of having a higher rate versus a lower rate is the tax implications for it. Because we do our taxes every year. You get your 1098 for your home. And on the 10,
Yeah. And I think because a lot of people don't understand rates in general and they I tell my clients I can give you any rate you want.
mm-hmm,
So if they come to me and they're very concerned about interest rate, I just literally have the conversation of, well, I can give you any rate you want. What rate do you want?
mm-hmm. How much do you
Oh,
want to pay for it?
I tell my clients, that the conversation just immediately shifts because it's like, again, if you don't understand, and this is where education is
Mm-hmm,
key, And this is a reason why I got into mortgages too, was because when I bought my houses, this is my second home now, but when I bought both my houses, I was completely lost. I had no clue
Hmm.
what I was doing. And you know what? I didn't care. They told me I was approved. When I bought my first house, they told me you're approved for 150. I remember we were approved for 150,000. And what did we do? We went and bought the house that was 150,000,
Hmm.
moved in, lived in it for a year, and then said, "Oh crap, we should have bought the house that was 80,000."
Yes.
Right. And so again, but you're so excited that you've just
Yes.
been approved that you don't care and you're ready to sign wherever.
Everything. Yes.
I could have signed at my firstborn, and
Yeah.
just, I didn't care. But then,
Yeah.
you're completely lost, and then you find out later on, like, oh man, how come
Yes.
nobody told me anything? And
Same. That's why I do my job the way that I do it, because when I bought my first house, the only thing they told me was don't ever be late on your mortgage. If you can be late on anything else, just don't make your mortgage payment late. And so I was like, sweet, got it. Won't make my mortgage payment late. And so I didn't understand anything. I didn't know what my interest rate was. I didn't know
right,
that my monthly payment could change. Like,
right.
I didn't know anything. All I knew was this is how much I got my house for, and this is what they said my payment is, and don't be late on it. And so now I probably overeducate my customers
Right,
to probably to my detriment, because
right.
I don't want anybody to get in a home and be like, dang, Tia didn't tell me this.
Yeah,
I didn't know this. And
right,
so, that's another thing. If you escrow, your payment can change. And that has nothing to do with the loan that you signed up for, because your taxes and your insurance are your taxes and your insurance, and your mortgage company just pays what the bill comes out to. And so, because of that, your payment can fluctuate from one year to the next, because of escrows.
right,
And like how you said, we took the 150 house, but maybe we should have taken the 80,000 house. But if your loan officer had educated you on that, you
right.
probably would have made a better decision. And how we were talking about also, how we were talking about like the rate spread. I can give you this lower rate, but it
Yeah,
costs $26,000. So that's the other thing that people don't understand when they are buying a home. So and this is how I explain it. I think this might be the simplest way possible to explain it. Every interest rate has a dollar sign attached to it.
hmm,
Every single rate has a dollar sign attached to it. Some of those dollar signs are negative, some of those dollar signs are positive. The higher up you are on that sheet, the lower that dollar sign is. But as you go down, which they call biting down your rate, it increases. So then after I do that, I say, let's look and see if this even makes financial sense to pay this much money. If you can't make this money back in 3 years, then it does not make sense to add all this money onto your loan. I
right.
recommend going between here and here. And
Hmm.
I had that conversation with every single one of my customers when it's time to lock. And then they're like, okay, I understand. I see what you're saying. I'm going to go with this. This is what the
Right,
payment is. How do you feel about this payment? You know?
right.
And so I wish, and I think now we're in an age where loan officers are more educational. But back in the day, like, before 2008, before the mortgage industry crashed, officers really didn't have a lot of ethics behind them.
Right.
And so they were just putting people in deals because they were just making buku dollars. And
Hmm.
now there's so many rules in place. But I think we're just more more empathetic, maybe because we're more in touch with our customers, maybe with the people that we talk to, because we have more access to the news. We see like the things that are going on in the world maybe a little bit more. I don't know. But I even hear my coworkers like doing the same thing, and talking more about like the payment and the costs, and saying this is what this looks like. Now you
Right.
tell me, and allow them to make the decision for you. I mean, for themselves, because then
For
there's
themselves. Right,
there's ownership in it. I
right,
think one of the last things that I want us to talk about, we talked about why you shouldn't be scared, but also because interest rates are so high, the industry has started trying to look at like different ways to help people alleviate, um, alleviate that strain a little bit. And that's through different programs. And it's things that you want to talk to your loan officers about, right? Your mortgage professionals about, like, do you have buy down options, seller paid buy down options? And I know you're a little bit more experienced with that. So do you want to share a little bit about kind of what 3-2-1 buy down would look like for somebody?
Yeah, so the lenders basically have come out with incentives because the rates have gone up, so they obviously have lost business because people again got scared, like we're saying, and stopped buying. So they've come out with these incentives, and they've come out with a temporary rate buy down. So with that, basically the seller of the home that you're buying is going to essentially give you seller concessions. Okay.
Mhm.
And a couple years ago, when the market was crazy and there were these bidding wars and all of that was going on, seller concessions completely went away. It wasn't even an option. You could not ask a seller to help you with closing costs. You could not ask them to help you to buy down your rate because they would have taken the next offer, right, in a heartbeat.
Mhm.
But now that the market is stabilizing, we are seeing that more houses are sitting on the market. They're sitting a lot longer than they, have been. And the sellers are more willing to contribute these seller concessions to sell the home, right? And to make the deal work. So with that temporary rate buy down that came out, they're allowing you to have a couple of options. So they have a 3-2-1 buy down, which basically the first year your interest rate. So let's say you qualify at a 7% interest rate just by yourself, your credit score, your credit profile, you qualify at 7%. The first year you would go down 3%.
Mhm.
Okay, so you would be at the 4% for the first year of the loan. Okay. Your payment would obviously go down because you're going from a 7 to a 4. So you're going to have a much lower mortgage payment for that entire year. Now, the second year, it goes to 2% below the 7. So it goes to 5%. Okay,
Mhm.
so it jumps from the 4 to the 5. So with that, your payment does go up a little bit, right? And then finally, the last year, it's going to go down by 1. So you take 7% minus 1, we're at 6%. So we went 4, 5, 6, right?
Yes.
So you're basically that third year, you're basically at 6. And then after that, you go back to that 7%
So your
interest rate
higher interest rate.
for those years, until the end of the loan or until you refinance, right? But the idea behind the temporary rate buy down is to take advantage of those lower interest rates. The seller is buying down or paying for the temporary rate buy down. So it's not coming out of your pocket. The seller's paying for it. You're taking advantage for the first 2 years. They have a 2-1 buy down as well. So you can
Yes.
do that as well. And again, talking to a mortgage professional, they're gonna price it out. They're gonna tell you what the best option is for you, because not everybody's going to work with a 3-2-1 buy down. Not everyone, it's going to work differently for everyone. But the idea behind it is before you get to back to that higher rate, that you refinance.
Yes.
You
Exactly.
refinance it. Hopefully at that point the rate is below 7%, because obviously if the rate's not any lower, it doesn't make financial sense for you to refinance. But
Yes.
that's the idea behind the rate buy down.
Yes.
There's also a permanent rate buy down. So the permanent rate buy down is also an option. So again, if you can get those seller concessions, and you don't really have to know much about seller concessions, because your loan officer and your realtor are really going to work hand in hand
Yes.
on that part of the deal. Okay.
Mhm.
So we'll communicate to the realtor, this is how much we need in seller concessions to be able to do this amazing, wonderful loan that we want to do for this client.
Yeah.
And they go and negotiate the seller concessions, and then we just throw it on whatever you want to throw it on. We can throw it on the rate, we can throw some on the rate, some on closing costs. It's a
Mhm.
beautiful thing. It's a
Yeah.
beautiful thing to witness. And I've done several temporary rate buy downs, and I've done a couple of permanent rate buy downs. And you kind of just have to see which one works the best for your unique financial
Yes,
situation.
exactly. What works best for you and your family. But it's a great thing to take advantage of. And sometimes, your real estate agent might not bring it up to you, but these programs are out here, these incentives are out here. And so when you're getting also paired up with your loan officer, you'll want to ask them also, well, can you facilitate this? Like, can your company do a temporary buy down? Or a lender paid buy down. There are lender paid buy downs out there also where it's not a 3-2-1, but maybe it's a 1% buy down for the first year. And then the key is hopefully the market kind of rights itself and inflation calms down and spending slows down, and we start to see those interest rates come down to something that is a little bit more recognizable and a little bit more affordable. But the key to all of this is recognizing that now is still a perfect time to buy homes. You shouldn't be scared to buy a home.
Nope.
Your interest rate is, like we said, just a vehicle to get you to your destination. It is temporary, and it's something that can always be changed. And so you don't have to be frightened. And also, like, just with these higher interest rate in the higher interest rate world, you can also kind of be secure in knowing that you're paying what the house is worth. You're not paying over or an inflated value on a home where you end up upside down because you paid $50,000 over asking price on a home that is worth $350,000, but you paid $400,000. And so that makes it harder. Like for the people that paid well over asking price, now they have a mortgage based off of this higher loan size. And when the market starts to right itself, say they want to refinance, say they want to take cash out, well, your home is only worth $350,000. So you don't have any equity in your home right now. And so people that are buying their homes in this market should feel a little bit more secure that they're not going well over asking price. And when the market shifts, you're going to have built up equity in your house. And so that I think is something that we want people to hear and know and not back away from it and say, I'm going to wait. Because what if you find a house that you love, but then you say, well, the interest rates are just too high. I'm going to wait, and then that house that you love is no longer there. So you just have to take advantage. You have to take advantage of it. And like you said, if the payment looks right, then why are we saying no? Tell me really why you're saying no to it.
Right. Yeah, I think you should be scared if you're not buying.
Yeah.
Not being scared to buy. I think you should really be scared and worried if you aren't buying because, like I told you earlier, real estate. I mean, you know what so one takeaway that from like my experience is that I'm seeing a lot of younger homeowners. And I mean, I have helped a couple of 20-something-year-olds. I mean, I'm talking about one of my last clients was 22. 22. Then the one before that was 23. And one of them was buying his first house. The 22-year-old was buying his second property.
Like I commend him for figuring it out early. I work with some kids that are like 20. They're not kids. I always say kids.
I know,
they're 23. We're old ladies, but like they're not kids. They're grown adults, but like 23, 24 years old.
Yeah.
I was like, the Lord knew I didn't need to be in this industry at 24 though, because I was irresponsible. But I did hear this guy, he goes around and he talks about mortgages and like all this stuff. And that is one of the things that he says, when you are first buying a home, you should buy a duplex. And then after you live in it for a year, 2 years, and you move out and you buy your next place. And I think he even said that should be a multi-family home.
Yes.
But maybe a little bit larger.
Right.
And then he even said your fourth home is the one that should be the single family home.
Right. Yep.
And you're building money.
Your wealth.
And you're building your wealth as you're doing this, and they pay for themselves. The homes pay for themselves. And when we were younger, though, I just don't know that people were talking about things like this as much. Maybe
Right,
we just weren't in the spaces to hear it.
right.
I don't know. I don't know.
I didn't hear about it at all.
The
Credit,
only
no one
reason
talked about credit.
nobody talked about credit, nobody talked about owning homes. The only reason, let me tell you, the only reason I bought a house, I was ready to move out. And I remember I was looking for apartments. I had a little, how before the internet was big, when you wanted to find an apartment, you had to go get like the apartment
The
guides.
apartment guide. I loved the
Yes,
apartment guide.
yes. And so I had an apartment guide, and my mom saw it in the kitchen, and she was like, "You don't want to live with me anymore?" And I was like, "No, I want to move out." And so she said, "Well,
I want to move out.
yeah, I want to be grown." And so she was like, "Don't go get an apartment because that's throwing money away. If you want to move out, then you need to buy a house because then you're not paying the money that you're spending is is working for you and you're not just throwing money away." So I've never lived in an apartment. I mean, we rented a house here and we rented a townhouse temporarily until we got to this house. And that was just like because Casey was first getting a job. I was moving out here, just kind of getting acclimated.
Right.
But my first home was my first house because
Mhm.
my mom said she told me that. Now that's all she told me.
Kudos to mom.
Yeah, that's
All
all she
right,
told
mom.
me. And so I
That's
sat
all
down.
she
She was
told
like,
me.
make a budget. She said, make a budget. So I did all those things. I sat down and made a
Yeah.
budget. Okay, this is what my bills are. I kind of estimated what I thought, like light bills and water bills would be.
Right.
I wasn't prepared for all the other things that come along with home ownership.
Right.
Like things
Right.
break, you got to pay for it.
Yeah. Yeah.
Like, I also had something to write off on my taxes. So I got a little bit more money back on my income taxes because I owned a
Right.
home. So, kudos to people for figuring it out early.
Early.
And the internet is giving more access and learning about things
Yeah.
like this. And so that's why I think, well, this younger generation is also different from us. I think our generation just really was out here trying to have fun. Like
Right.
we were out here just trying to live our complete best life. We were
Right.
not trying to start businesses.
Right. I know these, and now this generation is, yeah,
Now we're like, well, what were we doing in our 20s besides going to the club and hanging out? What were
right.
we doing?
And here we
And
are in our 40s
trying to
now
figure it out.
trying to figure it out.
I think we've done a lot of mortgage
Yeah,
talk tonight.
I think so. I think so. You're gonna have to do some editing and make it shorter. I don't know. They're
Probably
like,
it'll be fine. But one thing we kind of glossed over, and so we're gonna have to circle back to this,
okay.
is the homestead. Because you talked about how you have animals and children. We got to
Uh-huh.
talk just a little bit about the Berry Homestead.
Okay, well, what you want to know, girl? Because it's it's crazy here. I'm it's crazy here, and I work from home. Okay, so I have my office and I work from home, and how I've been able to just really do it all. I'm juggling right now.
Yeah.
I'm struggling with the whole balance thing, especially being
Mhm.
home. But we have, yeah, we decided that we wanted to live in the country, and it was always a dream of ours. And we are very into just kind of imagining manifestation, right? Of what we wanted our life to be. And we did vision boards and we talked
Mhm.
about it and we did all the corny things that people talk about doing, and
Yeah.
you're like, whatever, they're
Yeah.
out there. We did all the things and we got our dream, and we bought 7.5 acres about 3.5 years ago already. I mean, we picked up from El Paso and
Hmm.
we left. We were from El Paso, born and raised, and we had a house there, our first home, and we rented it out for a little while, and then we finally sold it, and we moved here, and we rented here as well because of course, when you're getting acclimated,
Yeah.
in the of a new city. We rented, and again, the whole time I'm like, I had a house. I had a house. I wasn't throwing my money away.
Yeah.
but again, faith, and I always go back to just, walking in faith
Yeah.
because it was tough. It was tough to kind of feel like we were going backwards,
Hmm.
and but we got through it by the grace of God, and we were able to purchase a 7.5 acre property, and we just have all the animals now, and I
All
feel
the
so bad.
animals.
All the animals we have pigs. We have 2 pigs currently. We have goats, about 4 or 5 goats right now. I don't even know. I lose count.
They keep
Um,
having babies.
they keep having babies. And then 2 horses.
Oh, y'all have horses now?
We have horses now.
Got
And so
two horses now.
we brought the 2 home. So we have
Oh, wow.
Sugar, who is about, in human years, she would be equivalent to about 24, 25 years old,
Oh, wow.
young
She's an old
adult.
lady.
Yeah, and Piper is about like a 14, 15-year-old would be. So she's a teenager.
Gotcha.
Currently, we have a turkey that's on his way to be Thanksgiving dinner.
No
Sorry if
way.
anyone's vegan, but
Is that really what the turkey is for?
he's not. He was
Oh,
he was purchased as a pet. We don't eat our animals. We get them. We love them. We raise them for the babies. But and I will not eat him. It's a joke because I
yeah.
don't think I could. I don't think I could. I'd be like, no,
He
I
was just,
couldn't. But he's been attacking us.
oh,
He's gotten
no.
very aggressive. And apparently turkeys are aggressive, but
I've
we
heard that.
figured we figured that he was, since we had him from a baby and he was a baby, that he wouldn't do that. But no, they're still wild animals,
They're
and
still wild. And then
they're
you have all the chicks.
and then we have chickens. We have about 30 chickens currently and about 12 baby chicks. So my husband will actually, Kenny Berry will actually incubate these eggs, and he hatches them out, and yeah, and he just keeps adding to the flock. So
But hey, eggs are expensive right now. I wish
yeah,
y'all were closer to me
I know.
so that I could get eggs because we bought a dozen eggs and I swear at one point they were $6. But anyhow, I
Okay.
am so glad that you worked all day and decided that you wanted to talk to me tonight.
I know. Me too. And you know what? I'm gonna, and this is what I do every night. And it's so important. Self-care is so important. Okay. I'll just throw
Yes.
that in there for everybody, regardless of what industry you're in. Every night, I like to take a nice hot bath with Epsom salt and some essential
I
oils.
was like,
Throw 'em in
cilantro?
there.
I should go do
Yeah.
that.
I like cilantro. I smell like pico de gallo, but I don't care. I love it. It's a great detox, and I just soak it. So that's what I'm gonna do.
Mhm.
Soak away the day, right? The stressful day, and tomorrow is a new day, new beginning.
Today.
We'll be
Yeah.
back at it.
We get out there and do the grind again. And yeah.
Exactly.
So thank you for being on here tonight. I didn't know how much fun we could have talking about mortgages, but
It
it's
was
been
fun.
fun. Yeah,
I
it's
liked
great.
it.
Yeah,
Let's
maybe
jump on and talk about more stuff other than mortgages.
yeah, we'll talk about something else another time because we always
Yeah,
have something. We can talk about my garden. I It's about time for me to
your
start
garden.
getting it together. I got plans for
Yeah,
my garden this year, but we'll talk about that later.
I'm excited for your garden and for you to
Yes.
share with us about your garden. But okay,
Yes.
guys. Well, yeah, thank you, Tia, for
Yes.
having me.
Yes. Thanks for
Yeah,
being on here. And thanks everybody for hanging out with us on We Just Talking.
yeah.
Bye.
Bye.